And now, here's Tom O'Brien.
Wow! Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 2 hours a day. We go 24 hours a day on the Internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day out there, safe day. Let's make it a great night, folks. We happen to be up in Boston. We're going to be doing the workshop tonight. And I'll tell you, it's pretty wild. You fly up. Florida, of course, always has that blue sky. Nice up here weather-wise, but, man, this gray sky is a whole different ball game. When we talk about gray skies, well, market-wise, let's take a look at it out here. We had the Dow down to 83, NASDAQ down 13, S&P's off 9, gold contract down $24, trading at $1,515 an ounce. Silver down $3.20 at $39.33. That one has just absolutely been taken to the cleaners big time. Platinum down $29, trading at $1,825 an ounce. Copper off 12 pennies at $4.13 a pound. Light sweet crude down $2.12, trading out at $108.93. Bonds up 16 ticks at $123.19. That's the 30-year. We have the dollar index down 4 ticks at 73.27. Euros at 148. Yen is down 33 ticks, trading out at 80.61. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. This is what we have, folks. S&P cash. We did out here today, you did billion shares versus a billion shares. We are at the 1347 mark. We got the 1341. Inside the range from the 18th of February is the 1344.07. Now, we're hammering that. Now, the Dow Industrials are actually hammering that. NYSE is about the same volume. It's not big volume in the Dow. There's a little divergence here. So that's your S&P. We go over to the Dow. We take a look at it. Same type of setup in the Dow. What the Dow does out here today, you're down $83. Which is nothing for the Dow. The number on the Dow we're looking at, we're 12,723. That, to get into that lower range, would be 12,389. Now, NASDAQ composite, different animal with the composite. This is what you have with the composite. Composite volume expanded again. We are at a price point of 28.28. Now, that's back inside the range. That range specifically, folks, is the February 18th range. When we got out of that range, bottom line is that there was no juice up there. That sets up the NASDAQ to get into this 2,600 mark, and right now we're at the 2828 mark. If we go take a look at the Russell 2000, this has been the weakest indice out here. The Russell 2000, that came down $10 today. That is at 832.90 right now. The 838 was the number. It got back inside the range. What that sets up for the Russell, to get down to this 798 to 755 level as we go downtown. Gold contract. Let's go over to silver first. The silver, basically this hammering just doesn't stop. Silver was down another $7 today. We're at 39.41. And when you take a look at this silver contract, what we have is this. We got down with 150,000 shares today, 150,000 contracts. Silver, we had made that first high out there on the 25th at 49.84. It tests that level at 49.56 and then just blew apart. Silver right now is set up just on this leg alone to get down to the 35 to 33 mark. That's going to be, it already is devastation for plenty of folks. But the bottom line is that this thing is not over yet. Gold contract. Now, it's going to get interesting here with gold is this, folks. Gold has held up. Gold today was down $23, but you're going to see the same type of – well, this is what you're going to have. Now, watch how this shakes out, folks. This is going to get really pretty bizarre, actually. What you have with gold is this. Gold certainly has held up much better than silver, but gold also didn't take off topside like silver did. Gold has gone from 1577 to 1516 in 3 days. You get the juice inside of 227,000 contracts. Now, that sets up 1445. What I expect you're going to see, though, is this. The sell-off that started in silver, first off, you had a parabolic move. Move was no doubt intense, parabolic. Sunday night, margins go up. What you're going to see is you're going to see the margins also go up in the gold contracts. And the reason being is that the number one, when you take a look at the characteristic inside it, you can still put up 6,700 for 151 grand in gold, and gold is getting more volatile right now. You know, that $25 move today gives you $2,500 either way, up or down. And when you go over and take a look at the silver contract, what we have with silver now, silver is up at the 16,000 level, 16,200, and you have maintenance at 1,200. And that is pushing the 197 mark. So 16,000 gives you 197. What you can see, you know, inside the silver market because of the volatility is that they raised the margins. I expect the same thing is going to happen in gold. And more than likely, what you're going to see then is that that's when the sell-off will actually really just escalate on itself. So something you got to remember about silver and gold and about the hard commodities in general, well, particularly silver and gold, is this, is that when they're going up, all the ETF structures are buying the metal and or buying the contracts, paper contracts, that is. They can do both. Well, they have to have metal. Some of them have to have metal. Others can have metal plus have the contracts. Bottom line, as it's going up, that's where the momentum is. As you are basically getting blown apart, and this is crucial to understand inside the market, the selling begets more selling. And the reason is this, is that as the SLV, as the silver contract is going down, what happens ASAP is that the SLV does have to turn around and sell the physical silver. What does that do? As they sell the physical silver, drives it lower. You know, this first phenomenon, folks, actually happened, and it basically gave everyone a slap in the back of the head in 2000. And what that was, ETFs were so new that folks didn't understand, particularly inside the NASDAQ 100, the 4Q, the 3 Qs. And what they didn't understand is that when one stock started blowing apart, whether it was JDSU, whether it was Cisco, whether it was WorldCom, inside the NDX 100, the actual ETF had to start selling. So then the ETF sells. As the ETF sells, what ends up happening is that it made the NDX 100 go down even more. In this particular case, what you're dealing with is that if they're selling the future, it makes the SLV go down. As SLV goes down, they got to sell the physical gold, physical silver rather. It goes right back in the market. That gets sold. You know, bottom line, it's going lower. Now, all of that, okay, is without the dollar going higher. This is where this gets really wild. You know, my take is that the dollar wants to go a lot higher. What you had out here with the dollar index today is this. The dollar index got down to 72.86, which, you know, got below the lows of the last 4 days, rejected them again, and stayed flat. When this dollar index takes off, folks, let me tell you something. Watch out. This market is going to be, the market itself is unstable right now, but the bottom line is that that dollar index takes off, it's going to be pretty intense. We can take a look at the, and this is straight across many commodities out here today, folks. If we take a look at, that's what you had. You had silver down 7.5%, cotton was off 3.5%, coffee was off 3.5%, sugar was off 3%, copper was off 2.5%, wheat was off 2.5%, natural gas was off 2.5%, crude oil was off 2%, cocoa was off 1.5%. It's straight across the board, and that's without the dollar going. The bottom line is that the dollar wants to move, and that dollar starts moving, and this is going to go, this commodity deal is going to be quite a correction. Now, let's go over to the bond contract. What we had is this. The bond contract coming into the 16th of March, that level there, it came in and hit it today, that 123.22. It hit 123.25. Not enough juice, however, okay? We came in and we hit that baby, and we hit it with 315,000 contracts versus 531,000. What it also hasn't done, though, is hasn't backed off. It got up today to 2 ticks over it. It's closed at 123.18. This is going to make another run for it, folks. So we'll see whether it hangs right underneath it, builds some cause. Today it didn't have the juice to get up and over that level. The reason that level is so crucial is that you take that level out, and if you take it out with volume, which it did not do today, then you get a large ABC up. You know, when you just sit right at it, which we're doing right now, we'll see if, in fact, it can build some cause to get up and over those levels. We take a look at the oil sector. Oil sector out here today, folks, and this is important to understand inside the weighting structure. The weighting structure, well, first off, the Russell 2000, the reason that's been the weakest is that that's where many of these mid-sized commodities are. They're in that index. That's why you see the Russell so weak. What I suspect you're going to have next is that the oil, large integrated oil and natural gas, after hitting really nice highs, those little babies are coming down, and they're coming down pretty hard. If we go over, let's first take a look at Oxy, Occidental. What we have with Oxy had hit a nice high up here 2 days ago. That high was out there at 115. You're at 108. It's trying to get back inside the 107.56. And remember something, folks. When you break a high and you can't hold that high, and you come back inside the lower range or bottom line, you're going to go down to the other side of that range. And it very well could be the end of the whole move. If we look at ExxonMobil, this we have at ExxonMobil. First high out there was $88.23. That was on the 23rd of February, 38 million shares traded. It tested it with 18. Then what does it do today? Comes off that with 22. ExxonMobil is at 84.81. Well, that little baby wants to run all the way down to this 78 mark. So it is absolutely a heads up in the marketplace, because when you have these oil companies, of course, have been making money hand over fist, but the reality right now is that they're selling not only the oil stocks, they start actually selling the crude today. If we go take a look at crude, this contract out here that we're dealing with right now is trading at 108, I believe. 108.93. Now, the 108.93, we did 314,000 contracts out here. That 314,000 contracts, she is coming into 292,000. You get one more day with oil coming down $2. That'll put oil right into $97 and back into 93, and that's that's a big number. What is absolutely wild out here is that I heard a few different analysts out here today saying, yeah, well, the commodities are going to get killed, but yet they're claiming the market's going to go up. There's no way. There's no way that the commodities, that's mathematically impossible because of the way the weighting structures are. This is Tom O'Brien. It's the TFNN. Stay right there, folks.
ETFs.